All right, so let's talk about some Forex and some things we can learn from some of the trades that I gave out as far as setups inside of PipsologyFx. Now, you guys know I provide this free content. If you follow me on Instagram, you're getting free content regularly. All you got to do is watch those stories, right? So when let's actually go here real quick. Boom. Let's look at PipsologyFx. Now, in this group, for those of you who've been following this page and follow me on Instagram and all that, you already know what we do is we give out setups and updates and breakdowns. We give the before, what we're looking to do in the market, and then we recap it, right? So you can see some of these trades, 400 pip entry on gold with the 50 pip continuation entry, some voice memo updates. I like to do that in the morning. GCAD, 130 pips up. GJ, 50 pips up. Still looking for that entry too. And then gold. This week with gold, this is what we're going to talk about today, right? Gold. This week we've had 100 pip bearish setup, 60 pip bearish setup, 50 pip bearish setup. Here's what's next. Hint, it's not going to be bullish, right? It's going to be bearish. It's going to be bearish. That's going to be important for later. Here's another one, EurNZD. All right, EurNZD looking to go bearish, right? So let's start with the gold setups this week. So it began this week on gold with a very, very simple setup that I posted last Friday. Today is Friday what is today? The 22nd. So last Friday, I gave out a end of the week recap with some updates for the following week and what I was looking for going into the fresh, brand new week. So basically the setup was as follows. If I could find this post, because I was scrolling and talking at the same time, not paying attention. All right, here it is.
All right, go with gold. Now on gold, we started this week with a bunch of running entries, and I continued to be bearish. And it ended up working out just fine. We ended up at the max.
So that voice that you hear is the recorded voice on the video. This is the video update that I sent them at the end of the week last week for gold, for EurNZD, and GCAD and GJ.
Go with gold. Trend line broke. And as you can see, the market's really
so here I'm explaining that we got a lower frame bullish situation going on that finally got broken structurally, basically a trend line break, right? And then we're looking for continuation.
Trying to push down. Now I have not entered this. I have not entered because it's not clean. Okay,
so here is where you're going to see me adjust the markup.
This is micro level, by the way. This is a smaller frame. The whole price. Okay, so right now, what do we have? A clean high and the first sign of a break. So now we have to.
All right, so I want to start from there. That was the first setup that we took this week. What I want to show you is how clean and easy this really was if you're paying attention to the pair. I want you to notice a couple of things, right? That trend line break right there. The fact that I've given them a clear high to target to sell from, because you want to sell high, you want to buy low. And since we're looking to sell because we're bearish, we want to sell from that particular price point. Now, let's go take a look at the market. This is gold, okay? This is the trend line break. Now, the way that I drew it up is I drew it up like this. Now, when you saw the update, what you saw was the market down here. But when Sunday and the market opened up all over again, we ended up retracing back to price, entering that market, and there's 126 pips in pocket, right? So right there, boom, there's your first sell of the week. When the market started coming back, because it created a higher low, so it's telling you it's bullish, it has some bullish strength. Even if it's short-term bullish strength, there's bullish strength there. You have to accept the fact that you may not be able to use the same entry price. Also, in these videos, I've told you to never enter on the same hour candle. Always wait for candle creation to justify your entry. Market comes all the way back to the IT price of 1472. As we can see, one high, two highs, three highs. There's your next trade, 64 pips. And then the market gets really, really sloppy. So in the update that I sent out in the group, I tell them, hey, we need to be under 1472 and create market there. It does that, right? And there's your next trade, 95 pips. Today, the market comes all the way back and we do it all over again for 100 pips on the drop. every single trade taken this week was a sell on gold. Now you may be asking why? Why are you still selling on gold when you've had higher lows being created and it's obviously trying to go bullish? Because every single time that market remained under 1472, that is the threshold to let me know that this market is still safe and sound within its bearish structure. Here's something else to take into consideration. On the daily, we are creating lower highs. So I will continue to follow that daily structure and continue to sell as long as the market does not break back over on that daily structure. So that all that really means is that every single time that I enter this market, I just need to make sure that my higher frame matches my lower frame for me to be able to continue selling safely. The market didn't move a lot this week. We started here, right? We started somewhere around here. It moved 124 pips on the downtrend and 224 pips back on the way up. So in reality, we just ranged between in like a 200 pip zone. Let's call it a 200 pip zone, which for gold is not much. Now we are in the fourth quarter of things. In the holiday season, things tend to slow down a little bit, but that does not mean that things are untradeable. We still were able to pick up 100 pips there, 50 here, 80, let's call it 80 there, and 100 here, right? So it's still a tradable situation. Gold was still able to provide its perfect setups. Now, what else do I tell you guys all the time? Knowing the trend is important. It is. Trend is your friend and all that cliche stuff. The other part is you got to know where you're entering from. So let's say you were bullish, okay? Let's say you were bullish. You could see where the market is trying to create its bullish support. The goal is always to find the best price possible to buy from, buy low, and the best price possible to sell from, sell high. That's the goal. The rest of it is just confirmation and precision of entry. But if you're trying to buy, where would you be looking to buy in this market, right? Well, I could see support here. I could see an attempt at support there. This was a tough one. But the real one was right here, right? Because if I look left, I have support. It's trying to create that support there. Also, if you're a Fibonacci fan, you draw from low to high, and that is a key 50 level for you to be able to possibly take that buy. Or if you were looking a little earlier, you draw from low to high, and there's a 61.8 tap that's really sexy for you to take that buy. Now, I wasn't bullish, so I'm going to look at this market from a bearish perspective and continuously try to hammer out the bearish plays in order for me to be able to feel comfortable in my attempts, right? I'm not the type of trader that takes the buys, take the sells. I don't look for these little 20, 30 pip trades. Not my style. There's nothing wrong with it. It's just not my style. So for weeks now, we've been selling. You know, if you've been following along on Instagram, you know that I've been hammering out these sells off of this daily chart. Every time this thing retested this high, I'm selling. And finally, about a week and a half ago, 2 weeks maybe, we got or maybe a little more, we got the break of that obvious support, right? That support finally broke. So because of that, I've remained bearish, right? And a lot of people have, you know, you guys voice your opinions to me. Some of you are kind about it. Some of you are fucking assholes. But you're like, no, it's bullish. It's bullish. Listen, I've been bullish. Go back in these YouTube videos. I was the same guy that's been bullish since April or May, right? I'm the same guy that has a video on this YouTube channel where I took 1,000 pips on an entry bullishly on gold. That doesn't mean that I can, sooner or later, I got to turn it over, right? I got to start selling. And yes, it's very bullish on the higher frame, but it's definitely in a retracement cycle, as you can see here. The creation of lower highs is telling you that, right? So you need to get to a place of better bullish integrity to be able to take a longer term buy. Again, that doesn't mean that the market isn't going to have bullish plays. It just means that the quality of the entry that I look for is definitely not going to be found in an M15 or an H1. I like that weekly, daily H4. Those are my areas of interest when I'm trading. Yes, I'll bring it down to an H1, but for only specific reasons, and that's mostly, you know, I like precision. I like to be precise about my entries. I like to gather up those details and make myself very comfortable in my entries. Because remember, I'm giving out setups to a group of people every single day, all the time. I can leave no stone unturned when it comes to my setup. So there we go. That's the gold breakdown. That's how we caught those entries. For those asking me those questions this week, how How are you able to take sales in this market? That's how. It starts with the break of a trend line. It starts with the lower high creation, which tells me I'm still bearish. The continuation on the way down. The thing comes all the way back. What do I tell you guys? Lock your profits. All right. It comes back to that 1472. We sell it again after multiple candle creation. It comes back and it breaks over. All right, cool. Now we got to wait to see. But Gustavo, what if it goes all the way bullish? Nobody cares. Nobody cares because I'm bearish, so I need bearish confirmation. It breaks back under for bearish confirmation, and there we go. We do it again. It comes back one more time. We do it one more time. There we go. We do it again, and that's that. So right now on gold, I am running an old entry that's been partial down for at the max was 600 pips, and currently running this entry for about 600 pips. I wish it was 600 pips for about 100 pips. So all good on gold. Everything profitable. Be smart about your entries. In other videos, I've told you this. Have a price. Pick a price. Stick to your plan. Don't just trade whatever the market gives you. Let that market come to you. Very simple, cliche thing that everybody knows. You buy low, you sell high. Think that way. Buy low, sell high. Don't chase the breakout so much. Oh my God, the market is breaking out the high. It's definitely going to reach to the sky. And then, boop, you're out of there, baby. It does it again right here, right? False breakout. Boop, you're out of there, baby. Make sure you're not that person. You're not that trader. Don't chase the breakout. Work the consolidations and the retracements of the market. It makes for a much easier situation. All right, now we're going to talk about EurNZD. Now, let's find the setup real quick. We got to go through all this value, do all this scrolling as I humble brag about the greatness of PipsologyFx. All right, now seriously. The market has been pretty interesting in the month of November. There's been some fast days and some slow days. Now, EurNZD actually allowed us a booming trade. That one. As you can see, working Fibonacci levels, you can see where this market did its full-on bearish trend. We entered nice and strong. If you follow me on Instagram, I post them all the time of people taking the trades and positive things said about my one-on-one coaching or the group. But the important thing to understand is none of it is possible if we're not really trading, right? So we give out those setups before. We tell people what we were looking for in the market, that we want to hold the trades, we're skimming, we're doing this, we're doing that, whatever it may be, right? And then there's always the follow-up, EurNZD and gold update, what's next, and things to remember. So I'm big on the educational part because I feel that what people do out there is they purposely leave out information in order for that person to never be able to become free when it comes to their trading. So notice that EurNZD was already in that bearish flow. Let's check it out. And basically, I'm not going to get into it, but you can see where the markup is. You can see all this stuff. Now let's cover EurNZD. Let's do it together. Let's look at it. Let's make sweet, sweet love to EurNZD. Now this chart is very similar to other stuff that we've already talked about in this video. Gold, right? 1, 2, 3 lower highs on EurNZD. This is EurNZD looking just like gold with these lower highs. Not exactly, but you get the point. The flow is bearish. What else do we have? The break of a strong support. I've been selling EurNZD for months now. And every time this market would get to that support, it would shoot it right back up. We would get right back up there and I would sell it again. And if we were in somewhere in the middle market, we would sell it again. So there's been tons of sells when it comes to EurNZD. Tons of sells. Tons of sells. There's videos on Instagram. There's videos on this YouTube channel. We've been caking off this EurNZD situation for a bit. Finally, on, I don't know if it was last week or this week. I have no idea. But one of those weeks, this market finally gave us that big boom in trade. Now let's look at how we picked this one up. You take a Fibonacci from here to here. Right, there you go, 61.8. Like money. The creation of a high, it's right here, right? Like money, bang, break of support, something to pay attention to. As this is happening, you can't just lose your shit. You actually have to realize what's going on. Oh my God, it broke support. Now we know exactly where we got to be looking for plan A to be looking for continuation trades. It has to be back at structure. It has to. It has to begin there. Can there be maybe an adjustment later? Of course, but it has to begin there. All right, so we got a couple of things going on here. The creation of lower highs, the break of this bullish run, right? The break with the retest that creates a lower high. That's one high, two highs. That comes all the way down to support, and then we establish a new high. Yes, it's channeling up, but it's also following Fibonacci structure. Everything is great. Everything is good. We created 3 lower highs. So what am I going to do after this huge bearish play? What am I going to do? Am I going to buy? No. I'm going to partial this out and start looking for my next sell. Why? Because everything on that daily frame is saying bearish, and if that doesn't change, I don't change. And then the market starts gliding all the way back. Okay, and then it comes down, and then it holds support. We started this week somewhere down here within this weird support area. So I'm looking for that market to break that support area. It never did so. It came back to the high, worked that high again, right? Worked that high, got a little sloppy. I actually missed this entry, all right? It left without me. Does that mean that I sell from the low? Absolutely not. Does that mean that I try to take a buy because I haven't taken a trade on EurNZD and I need a trade right now? No. It means you stop everything. You think for a second. Stop and fucking think. What should you do here? What's the plan? So if I take my Fibonacci from this high to this low, I need to work my key levels. I need to work my structure. I need to see something, right? So what do I got right now? I got an established high. I'm at that 61.8. I'm in a higher frame structure of lower highs. I gotta be bearish, all right? I know that. I'm solid with that information. What's next? I need that market to get up here. What's my other rule? Hour, right? We don't get in on the same hour candle. Market gets all the way up there, candle swaps over, and bang! There's your trade. There is your trade right there. It's 80 pips. Right now, this thing's running at about 100 and something pips going. Now it's the weekend right now. All right? What else do we have here for those who missed it, the snipe entry? Not even going to lie to you. This entry is one of those more advanced confidence, not the technical part, well maybe, but the confidence part. I've been around for a long time. I trust my style. I trust my entries. There's no question in what I like to do in the market. The other thing that lets you know whether you truly have arrived is if other people have opinions that counter your opinion on the market and you don't give a shit. If you don't give a shit and then you still win, that says a lot about where you're at when it comes to your experience level in trading. If you're somebody that the moment that somebody else shows you a chart that maybe has an opposing opinion, you automatically get sidetracked, you're still a noob. That's the truth, right? You're still lack confidence. Anyways, market gets all the way back to structure and then drops. What's the next thing that we see for a continuation? On a smaller frame, the creation of lower highs established on a 4-hour chart with multiple candle creation, baby! And there's your next sell. Now, I didn't take that, but I'm trying to show you that there's other entries for you. They're available. Now, what if I took my Fibonacci from this high to this low? Right here, man. Right here. Right here. Beautiful. Even that 50 level respect. Beautiful. It's beautiful. Structure within structure. Gustavo likes it. He likes it. Now, what's the most important part of this conversation on this video? That every single trade that I give out, setups, they are pre-planned. Everything is planned. From where we're going to get in from, to what confirmations I need, to why I need that, right? And sometimes it's going to leave you out of the market. And you know what? If sometimes you get left out of the market, all the times you should give a shit. Don't give a crap about not getting a trade that was maybe in front of you that you missed. You know when you should get angry? When you had a plan, the market worked out that way, and you did not pull the trigger. That's when you should get angry at yourself. But anything where you miss an entry, or maybe the market was a little too fast, or maybe you were bullish and then you're waiting and waiting for bullish confirmation and it turns bearish and that's it, you're left out of the market. It is what it is, man. You're not going to be perfect. I'm not perfect. Your favorite trader's trader is not perfect. I'm telling you right now, it's not going to happen. It's not going to happen. I'm not perfect. You know, this week I lost two trades, negative 17 and negative 22 pips. I remember, right? And it's going to happen. It's going to happen. You work all your confirmations, you work the setup, you work the plan, and you lose. Notice I said negative 17 and negative 22. I didn't say negative 2,000 pips. I didn't say negative 50 pips and I blew my account, right? That's the problem. You guys aren't out there looking for something that's high probability, and then also allowing yourself to take the occasional L, which is going to happen, right? I would rather take that negative 17, negative 22, and then pop out this 100 pip trade right there. Covers those losses and then some. Or gold, right? Gold had 5 setups this week, 4 or 5 setups. Or GJ that we started the week with a profitable setup on that. Or GCAD, profitable setup on that for 200 pips, right? So that's the conversation. That's the conversation. The conversation is market structure and a pre-planned approach to the market. It's not about fancy systems or anything. I mean, if you have one, great, enjoy it. But for those of you that are following me, you've probably already tried those fancy systems. You've tried all the trainings. You've done a bunch of stuff. You've watched all the videos, blah, 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 and you still don't understand what to do. Bring it back to basics, man, and become the king of basics. Have a foundation made of hardcore metal and cement, right? What you really need to do is to grow your understanding of the market to such a level that you have confidence in your entries. That is very important and something that's very overlooked. Because when you're confident about your entries, you do not over leverage because you know there's going to be another win. Most people out there, they're too busy trying to hit a home run because they know every time they make money, they're lucky. And if they hit home runs, they're going to be able to survive and survive and survive. That's not what we do here. We're looking for percentage gains. We're looking for smart trading. We're looking for your winning percentage, your high probability setups, your controlled and confident entries. You guys see those posts on Instagram. You see those messages people put out there. That's what you need. You need confidence, right? You need to have that aha moment stick with you, and that's who you become. So that's that. Now, if you are someone out there looking for help, you're looking for help with your trading, we have the PipsologyFx group. We also have private coaching, right? My one-on-one private coaching that I've been doing for way longer than the group. The group's only been around for like 2 years. I've been coaching for much longer than that. All right, so contact me until Black Friday. The group still has the $50 a month with the entry fee. After Black Friday, that price is going up. So if you're watching this video and Black Friday 2019 has already passed, the price is probably already up. No, it is already up. All right. Now, if you're looking for more information, here's what you can do. Contact me on Instagram. All right. If you need more information, you can contact me on Instagram. But what I'm going to tell you to do is to watch content. I'm not going to convince you to join PipsologyFx, to join ZapzTrading. Click the hashtags. Go visit them. Go look at all the stuff. Go look at all the posts. Go to the highlights, right, where you're going to see all these different things that have been said, and just keep going through it. I don't know what else to do. You know, what we do is we continuously post and post and post. So here, like this example, 400 to 3,000 by a student, right? Grew his account. Next example, this person giving me a shout out. There was a point where I struggled to catch 10 pips, but I'm learning to pull that behind me the Zaps way, right? The guy is finally seeing a change in his trading. Or this one with different things that have been said. I haven't paid myself yet. I started with 1K in October. I'm at 7K now. I think I'll pay that's somebody who made $6,000, right? And then this one, another $1,000 night while I was sleeping, no big deal or anything. And then, you know, this person who told me that they 2 to 4K each and every week. That's what they're pulling. You know, different things, different things. This one's another testimonial. This is another testimonial. This is another testimonial. This is a personal one of me catching trades on gold. This is gold. See the sells, see the break, all that stuff. That's gold, right? All this stuff, wherever you see my face like that with that logo is trading stuff. If obviously you see screenshots or that, it's trading stuff. All this stuff is trading stuff. Enjoy it. Love it. Look at it. The other thing you can do, if you need a little more information, you're already convinced. You already know what you want, but you just need to know how this works. You go to YouTube. And you let YouTube load as it lags to hell, even though you have one of the most expensive internets. And then you go to this frequently asked questions video. That frequently asked questions video talks about ZapzTrading, PipsologyFx, and also some basic questions. Like, if you're new, can you do this and this and that and the other, right? The answer is yes. If you're new, you can. I coach new people all the time. It just takes longer. And if you're new, you can join the group, but you have to have proper expectations of how fast you're going to learn this. Right? You're new. You're learning a brand new language, and then you're learning a brand new art, a brand new skill. It's not going to happen overnight, no matter how many times somebody tells you it is. I'm telling you it's not. And if that stops the sale from happening, then good riddance. Because only a moron would think that they can learn how to trade in a couple of weeks or a couple of months to the level that you see it from me and from others that are profitable and have been working at it for years. Only an idiot would think that that's the way this works. But some people are idiots and they believe that. So I'm not going to work with an idiot. I'm going to tell people the truth so that the smart ones are the ones that float to the top and actually make themselves be known that they're ready to actually work towards something. All right. So on this YouTube channel, you have all these different videos and breakdowns and different things that I've done over the years. And that's that, man. So as I always like to end every single video, happy trading.